I think Bitcoin could easily end the year at new all-time highs. So that means getting north of about 125 up to 130,000. I think that because we continue to see strong inflows into Bitcoin ETFs, and I think you could see some positioning into Bitcoin in the end of the year by financial advisors who want to show their clients that they understand where this market is going. Whether we'll get all the way to 150, we'll have to see, but I wouldn't write off that probability. I do think the sellers are nearing exhaustion and the buyers are still relatively hungry. And when those two things sort of cross paths, again, I think we could end the year close or at new all-time highs.
Bitcoin's valuation is presently elevated, demonstrating consistent upward movement with a positive daily percentage change. This development occurs alongside robust movement of capital into Bitcoin exchange-traded funds, indicating rising commitment and belief from investors. The prevailing sentiment across the market seems to be evolving toward a more optimistic outlook as sustained buyer interest accumulates. Given this environment, methods that incorporate access to Bitcoin via these exchange-traded funds are becoming more appealing as individuals aim to profit from anticipated increases and the asset's continued development. In a recent interview, Matt Hougan shared similar optimism, highlighting the strong inflows into Bitcoin ETFs and the potential for Bitcoin to reach new all-time highs before the end of the year. He noted that sellers are showing signs of fatigue while buyers remain eager, suggesting that current levels could represent a significant buying opportunity. The convergence of these market forces makes the outlook for Bitcoin positive, with estimates placing its year-end value potentially between $125,000 and $130,000, and even leaving room for a further rise toward $150,000 if market conditions hold strong. This perspective reinforces a growing consensus about Bitcoin's potential trajectory as the market nears the year's close. The big question now is, what specific currently unpriced regulatory or fundamental catalyst could propel Bitcoin's valuation significantly past prevailing elevated forecasts by the end of 2025? Let's take you back to Matt Hougan's interview, where he highlights the potential for Bitcoin to achieve new all-time highs soon. This is an important video you do not want to miss. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this.
How would you say this new ETF is performing so far?
I think it's been a fantastic launch. Investors were clearly hungry for Solana exposure in a simple staking spot ETF, and they've been buying BSOL in droves. It's the fastest growing new ETF to launch this year out of 850 ETFs, not just in crypto, but across all assets. I think people recognize that Solana is one of the most exciting crypto assets on the market today. It has some of the biggest upside. We've had a little market pullback. People have an opportunity to get in at a fantastic entry price with Solana trading below 160. It makes me really excited. I think these flows will continue. I think what we've seen is just a down payment. And again, we're just so excited to have BSOL on the market. I love crypto investments that give you two bets at once. And that's what you're getting with BSOL, right? You're betting that stablecoins and tokenization will be more important in 5 years than they are today. Solana has a role to play in that ecosystem. So if it just grows with the market, this could be a fantastic investment. And then, as you mentioned, you're betting that Solana will win a bigger share of that market. Ethereum is a clear leader. It's a fantastic, exciting protocol, but Solana is getting key wins. Just last week, we saw Western Union launch a stablecoin on Solana. So that's a bet I like as well. If both of those bets pay off, you could see this asset double, triple, maybe grow by 10x in the next few years. It's really exciting to get that exposure. And then the other piece you mentioned was the staking element. The real beauty of BSOL, or ETF, is not only does it give you exposure to Solana, but it stakes 100% of that Solana. So chasing after the 7% plus yields that are available to have one of the most exciting assets in one of the most exciting markets, stablecoins and tokenization, with phenomenal technology and real momentum, plus a 7% staking yield. I think that's part of why you've seen that $400 million plus flow into BSOL in just its first week on the market.
Are there any plans to offer even more new products like this?
Absolutely. We think there's demand for exposure to a large number of those altcoins. I think that you'll see assets like XRP and other major assets get their ETFs relatively soon. We've seen filings from the SEC, not talking about any specific filing, but we've seen those moving through the system. We're going to wake up in 6 months and investors are going to be able to use high quality, low cost ETFs to access the top 10, maybe top 20 ETFs. And then the next exciting thing beyond that is you're going to start to see ETFs that package those together in diversified exposures. Those index-based ETFs, I actually think could be one of the surprises of the market. I could think they could be, bigger even than the Ethereum ETF. So there is definitely more coming from Bitwise. We've entered the ETF era of crypto, and I think that's a very good thing for investors. It's a fundamentally better technology and not just a little bit better. The analogy is between writing letters and sending emails. How many of us still write letters? They're very quaint. It's nice every 3 years when you receive one from a friend, but we write emails because it's faster, cheaper, 24/7. Dollars move already today over networks like Ethereum and Solana faster than they do over the largest banking networks in the world. Not just a little bit faster. I can move money anywhere in the world on a blockchain almost instantaneously for very little cost. I just think it's inevitable that all payments will move over stablecoin rails. All major assets will move over over blockchain-based rails. And it's not just me. You're hearing that from the head of the SEC. You're hearing that from the leadership of the largest asset managers in the world, like BlackRock. You're seeing it when every major Wall Street institution is launching a stablecoin and tokenization push. I think this will happen faster than people expect. Now that we have the Genius Act, now that we have regulation around these and people aren't afraid to interact with them, I think we could wake up in just a few years and this could be a dominant way that we pay for things, that we trade stocks, that we trade bonds, that we trade ETFs. This is a massive upgrade of our financial ecosystem. And again, I think it's coming faster than most people think.
How would you compare Ethereum to the Solana blockchain?
Yeah, look, Ethereum is the market leader. It's the king of this area, and I think it has a very bright future. You see a lot of institutions choosing to build on ETH. They're accelerating from a technological perspective. I love ETH and I own it. The reason I wrote that I was so excited about Solana is just because it's so relatively small. It's only 1/5 the size of Ethereum from a market cap perspective. It's 1/25 the size of Bitcoin. I think you could see Solana double or triple or quadruple or 5x its market share, and the price could go up substantially, even as Ethereum is doing exceptionally well. So look, I love all my children equally. I love Ethereum and I hold it as a core part of my portfolio. I think its prospect is extraordinarily bright. I think it's undervalued, but I think Solana may be even more undervalued versus its technology and its momentum. It is a very user-friendly blockchain. And I think that is a killer app that's maybe slightly underrated by the market. I think it will have a bigger share going forward. It's a really interesting time in the market because it's almost a tale of two markets. Crypto retail is in max desperation. We've seen leverage blowouts. We've seen issues with vaults. We've seen issues with yield protocols. And the market for sort of crypto native retail is just more depressed than I've ever seen it. I think that market is close to a bottom. It's hard to find a crypto native investor who still has much enthusiasm for the market. I think the market is shifting into an institutionally driven market. And interestingly, that market is still bullish. When I go out and speak to institutions or financial advisors, they're still excited to allocate to an asset class that if you pan back and look over the course of a year is still delivering very strong returns. So my view of the market is we have to get through this retail flush out. We have to hit bottom from a sentiment perspective. I think we're very close to that. And then I'm optimistic that we rally into the end of the year and into 2026 as the institutional investors who are more maybe even keeled about what's going on at a fundamental level in crypto start to drive the market forward. So I'm optimistic, but we do have to finish this washout of retail sentiment. And again, I think we're closer to the end of that than the beginning, but there always could be a little bit more downside. Actually, I don't think Saylor is that far off. I think Bitcoin could easily end the year at new all-time highs. So that means getting north of about 125 up to 130,000. I think that because we continue to see strong inflows into Bitcoin ETFs, and I think you could see some positioning into Bitcoin in the end of the year by financial advisors who want to show their clients that they understand where this market is going. Whether we'll get all the way to 150, we'll have to see, but I wouldn't write off that probability. I do think the sellers are nearing exhaustion and the buyers are still relatively hungry. And when those two things sort of cross paths, again, I think we could end the year close or at new all-time highs. And if we're lucky, we'll get to Saylor's target as well.
The new Solana ETF has outperformed all 850 ETFs that launched in 2025 by hitting a record $56 million in trading volume on its first day, showing strong investor demand for simple staking spot exposure to Solana. Despite this, Solana's token price has pulled back, currently trading below $170, which presents an attractive entry point as the market experiences a modest downturn. Solana is recognized as one of the most promising crypto assets with considerable upside potential, supported by real-world adoption examples like Western Union launching a stablecoin on its blockchain. The ETF uniquely stakes 100% of its Solana holdings, delivering over 7% yield to investors, combining capital growth with income generation. The broader crypto market is changing from retail-driven enthusiasm to more measured institutional interest, seen as a positive sign for sustainable gains. While Ethereum remains the dominant blockchain with a large market cap, Solana's smaller size and faster, more user-friendly technology position it well for significant growth ahead. Meanwhile, popular American entrepreneur Anthony Pompliano argues that the sideways price action is due to early holders selling their massive gains, and the persistent demand from the traditional financial system is absorbing that supply. Let's turn our attention to his latest market forecast.
We are at 100,000. Do you think it goes below significantly, or this is a nut? We've seen this movie before.
Yeah, look, I think that there's a reckoning that's happening across both crypto and Wall Street, which is the Wall Street folks are realizing that Bitcoin is real and it's going to be here to stay. At the same time, the crypto people are realizing that Wall Street plays a very different game. Wall Street actually does not want an asset that goes up, 100x and then drops 80%. Every 3 to 4 years. They want something that is much more predictable, much more stable. And so
why'd they get so involved with it? Because that's Bitcoin
is not as risky today as it used to be, right? If you were buying Bitcoin in 2012 or 2025,
it was at 125 about a month ago.
Of course, but if you think about the risk you take, you should get paid for. And so right now, Bitcoin is much less risky today than it was a decade ago. And so people are going to get a lower return. Now, what I think is really interesting is also that lower volatility in Bitcoin is allowing these large pools of capital to come in and start playing. And so in a weird way, the volatility coming down is opening up the total addressable market of Bitcoin. And what we have seen is less volatility to the upside, but that likely also means less volatility to the downside. Usually in bull markets, you see 4, 5, 6 different 30+% drawdowns. We haven't seen that during this bull market. And so you're just getting dampening of volatility over time, which frankly is boring to a lot of the early investors. And I think that's why you see a lot of those guys starting to sell.
If you don't take her price targets into account, the point she was making, I thought was interesting. And that is that maybe the notion that Bitcoin becomes more than just a store of value in digital gold, the idea that it eventually becomes something for cross-border transactions and instantaneous payment. That could be, she's basically saying stablecoin could take a lot of that market share.
I would go even further. I think it's already taking that, right? I think that's kind of her point.
So Bitcoin's never going to be anything other than digital gold?
For years, I think I've been coming on here and saying, hey, we know for sure that people want to use it as a store of value. Maybe one day it'll become a medium of exchange. The question of always like, are you going to buy your coffee with it? The hard part about using Bitcoin for transactions in that manner is if you think Bitcoin is going to appreciate, you don't want to spend an asset that is likely to appreciate in the future.
The guys that bought the pizza that now
correct. And so instead, what do? You spend something that you think is going to depreciate over time, which is the U.S. dollar. And so the rise of stable coins, I think, is really just taking the exact same asset, it's the U.S. dollar with the same monetary policy. You're putting it on new rails. And what we're finding is that the demand for dollars was way higher than we ever thought before. And I think that's a good thing for the United States and for the U.S. dollar.
Well, Bitcoin is still like trading like a NASDAQ stock, on steroids at times.
At times.
When does that change?
Well, here's what's interesting: is at times it trades, right in line with Nasdaq. Other times it's not. I mean, earlier a couple of weeks ago, Nasdaq was running and Bitcoin was going sideways, right? And so I think that what people are really trying to figure out is it correlated? Is it non-correlated? Is it inversely correlated? And part of it is that Bitcoin is still in this transition period. My friend Jordy Visser's got this great way of framing it. He says Bitcoin is having its IPO moment. And the whole idea is that you have the early holders of Bitcoin who are dispersing that Bitcoin into the market. And there has been billions and billions of dollars of sales of Bitcoin coming from those early holders, yet the Bitcoin price is still at $100,000. And so there is this persistent bid coming from the traditional financial system saying, we want to buy the Bitcoin, and we're happy to take it out of the hands of those early holders.
If it went to zero, that would be that'd be a real issue, would it not?
Look, there's always some, person who's going to point out the kind of 0.0001% chance of software
quantum computing,
or quantum computer, whatever. Right? But I think for most people, they see Bitcoin as not going away. It's here to stay. And I think that's why you see these large pools of capital starting to participate.
People that think it's going to zero never short it.
Listen,
I would short it if I thought it was going to zero.
The market is the referee. If people for some reason think it's going to zero,
that's a luxury belief. That's what I call it, because nothing can happen. You can believe it. Henry Blodgett still thinks it's going to zero. It's either going to a million or to zero. It's a luxury belief. You can have it, and no one's ever going to call you out on it, but you're never going to short it because you don't ever put any money down.
I do think that there is a theme that is happening right now that people have not yet wrapped their head around, which is this whole idea of crypto is going to be dead in a decade, right? People are not going to be talking about crypto. We're just going to talk about finance. Everything is now merging together. You have the crypto world and you've got the traditional finance world.
So crypto will be just so intertwined with the financial world that we won't even use the term?
We used to think about the internet, like internet finance, and then there's the finance industry. Now it's just finance. Same thing's going to happen with crypto, right? BlackRock, as an example, BlackRock could be described as a crypto company. Their most profitable product is their Bitcoin product. They're talking about tokenization all the time. Like, they are trying to adopt these new technologies. All of the big asset managers, they're trying to figure out, how do we play here? Do we actually have funds that invest in this space? Do we tokenize our funds? What do we do? And so over the next decade or so, crypto as a concept is going to be dead, and you're just going to hear people talk about finance. And I think that's a good thing. That's the maturation of the industry. What people forget sometimes is how quickly everything is accelerating now. One of the things that we've done is we've launched a software product called Sylvia that allows somebody to come in and they can attach their bank account, their brokerage account, their crypto account. They can upload their real estate, their private investments, their credit cards, all this stuff. And the AI goes to work and starts to immediately begin helping them get their financial life in better order, right? It's kind of help you grow your investment portfolio. And the reason why that's important is because now all of a sudden software can replace financial advisors or your stockbrokers. And so we think that the same way that AI is attacking things in personal finance with a product like Sylvia, we also think that the same thing is happening. Bitcoin is attacking store of value. We think stablecoins are attacking medium of exchange. We think tokenization is going to attack the stock market. It is the digitization. And the framework I've been talking about since 2018, 2017 is we had an analog financial system. We then upgraded it to an electronic QSIP system. So you used to have a physical stock certificate, a physical deed in your home, et cetera. It all became electronic. Now we are going from the electronic QSIP to this digital world. It's the same assets. It's the same market structure. It is just now going to be in a different form factor, and that allows all the software to get to it.
Anthony Pompliano explained that Bitcoin is now seen as a lasting asset by Wall Street, while the crypto community is realizing Wall Street prefers more stable, predictable investments than the typical volatile cryptocurrency with huge price swings. He noted Bitcoin's risk has significantly decreased compared to a decade ago, meaning investors should expect lower returns. He pointed out that the reduced volatility is attracting larger pools of capital, expanding Bitcoin's total addressable market. Unlike previous bull markets marked by frequent deep drawdowns, this cycle has shown dampened volatility, which may be less exciting for early investors who are starting to sell. He discussed the notion that Bitcoin will likely remain digital gold rather than becoming a widely used medium of exchange, as spending an asset expected to appreciate is unlikely. Instead, stablecoins, which are US dollars on blockchain rails, are taking over the transactional market, reflecting high dollar demand benefiting the US economy. Anthony Pompliano remarked that Bitcoin's price behavior sometimes aligns with the Nasdaq, but also diverges, indicating it is still in a transition phase akin to an IPO, with early holders selling and traditional finance stepping in. He dismissed concerns about Bitcoin's demise as a luxury belief, emphasizing that Bitcoin is here to stay, supported by institutional capital that buys up coins from early holders. Pompliano predicted the merging of crypto and traditional finance into a unified financial system within a decade. He shared the example of AI-powered financial software transforming personal finance by consolidating assets, and saw Bitcoin, stablecoins, and tokenization as digital upgrades to the financial ecosystem, shifting from analog to digital with greater efficiency and new capabilities. This digital transformation requires more energy but unlocks significant growth and innovation potential. Given the current shift from retail to institutional investors in the crypto market, how do you think this change will impact market volatility and price stability in the coming months? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.